Hi, this is the Everyday Economist, and today I'll be answering a very common question I've been getting, which is why is gold rising? I'll also be answering the second most common question I've been getting, which is related to this, is why is oil falling? So let's get into both of those questions. But first, as the theme is both for this video and this channel, let's go back to the first video I published on my new channel, which is this one. It's the first video of the channel and it dates back to 2021, coming up on its 4th year anniversary. And at the end of that video, it's a very long video, it's 2 hours and 31 minutes where I explain everything related to the various topics that you'll see featured here in much more greater detail. But in that video, this is the concluding slide. And I want to revisit this to see and hold myself accountable in the sense of whether these predictions came true or not. And as you can see, almost all of them came true, and even the one that didn't came true, I'll explain why we were close. The first one was we said BTC, Bitcoin, will facilitate a historic transfer of wealth. From 4 years ago, this has held true. Bitcoin, since that time, you can check the price, has doubled. And that will continue to double because I explained in the video economic mismanagement, the Federal Reserve's irresponsible behavior, and what have you. And I also mentioned in that video that there will be more economic inequality due to excessive printing. If you recall, when Biden was elected, there was a lot of people on established media platforms and saying that this is now a change in administration, we're going to have responsibility implemented back at the Federal Reserve and at the Treasury. And I explained how that is just farce. It's not going to happen. And in fact, economic inequality is going to get worse, which it did happen. But that, anyone could have easily predicted that. That wasn't really anything worth mentioning, but I was just making the point of going against the more established narrative that because we have a new president, things are going to get better, when I said that those decisions are not made at the White House. That was my point there. But this one, related to the above, the third one is that we're going to have more social instability and political violence, as we've seen recently with assassinations, with protests, riots. It's also gotten worse as well. There was no new election, new leader, new opportunity for unity, because politics is a downstream from economics. If you don't fix economics, you're not going to have a stable political system. You can't, regardless of who's leading it. This fourth one is an interesting prediction because it didn't come true, but let's see what I mean. We said in that video I predicted the geopolitical apparatus calculus pointed towards a conflict when I made this video in November of 2021. My prediction was that China and Taiwan are going to go at it. And if you look, I even predicted the year and the month, February 2022. And although I was wrong in that it wasn't China and it wasn't Taiwan, it didn't end up being Russia and Ukraine, which in the video I said that would be the second opportunity. And here I got both the month and the year right. And that's why it's a smaller little check mark over here. And then the last point is that more countries, and this is exactly the lead into the current video, is that more countries ditch US dollars as it heads towards debasement. And that's, again, economic mismanagement, runaway inflation, and things like that. So again, these are predictions from 4 years ago. You might ask, how does it relate to the current video? It's the last point that really does, but as we got there, I wanted to also showcase some other things that we have discussed on this channel for those who were a little bit skeptical back in the day. But let's get into the last point, and again, to the title of this video. So we see very quickly gold's historic rise, unprecedented levels. We had a huge run starting towards the tail end of October, up until just a few days ago when gold dropped, but even still, it's at historic highs. At the same time as gold has been rising, oil has actually been coming down and down and down. And Bloomberg is claiming that it's in the oversold territory, but we'll see. Again, this is unusual. Gold rising all the way up to historic highs, and oil coming down to multi-year historic lows. And the reason I say it doesn't make sense or it's interesting is because this is really rare. Usually when gold spikes, so does oil. We saw this, and you can look at the scatter plot with historical instances. When gold and oil went up, that's the most common instance, both after the oil crisis, first and number two. But conversely or inversely, when gold falls in price, oil should usually follow. We see a lot of data points for that as well. Very rarely do we have oil going up and gold coming down. I mean, it makes sense if we have supply chain issues short term. But here we have gold going up and oil coming down, and that's interesting. But it also signals to you that this is not the free and fair market operating, because if it did, it would either be in this quadrant or in this quadrant. They should, in theory, as economic tells us, move in tandem, because they're both priced in US dollars, and the underlying unit being the same should suggest, or at least inculcate, a sense of positive correlation in the same direction. But this shows to me, at least in my analysis, that it's a signal for manipulation. That gold going up while oil is coming down means that there are other forces and factors involved in the free and fair market. Let me explain. And to do that, let's start with gold and then get into oil so we can really get a comprehensive overview of both of them. So let's look at some of the reasons why global banks are actually replacing dollars with gold. This is one of the main factors of why gold is going up, is because countries around the world are looking at the US causing and saying this is not sound economic policy, be it the tariffs or even fiscal policy with spending and even monetary policy, like how the Fed is setting interest rates. They cut interest rates, for example, the last time when they really shouldn't have, because inflation really is technically not under control. It's still above 3%. And now they're coming out in articles in the Wall Street Journal saying, oh, get used to the 3%. You know, it's sort of gaslighting. It's saying inflation doesn't exist and saying it does exist, but now saying it exists and get used to it. So these are all red signals to every central bank around the world that the US dollar, as stable and as good as it is compared to all the other currencies in the world, perhaps in the short term while Trump is president in the next 4 years, or if he manages to get a third term, who knows? It's not sound economic policy, so they're divesting away. And that's what we see. So the Fed is no longer independent. We see immense political pressure on Jerome Powell. And we see fickle U.S. policy with regards to trade and tariffs. The U.S. imposes sanctions one day and takes them off the other. So that also causes people to sell U.S. dollars. But we also have AI bubble scares. People are saying AI is a bubble. I'll make another video about that from an economic point of view. And that is also causing some people to be scared, because who's at the epicenter of this AI bubble if it goes bust? It's the United States. So that is more cause for concern. So this is just to say, as countries around the world, as you can see, sell US dollars, what other option do they have? Sure, they can buy euros, but the EU is very closely economic connected to the US. So if the EU goes down, so will if the US dollar goes down, so will the EU. So gold is only the real safe haven for the short term. Gold is not really an investment. It's like usually where you park your cash short term to fend off against current insecurities in the present term. And this is one of the main reasons. But is that all? Let's see. Well, I think there's also a second reason, hand in hand, and this is kind of being underreported. It's being reported on its own that the US dollar is falling in value in historic lows, but it's not being connected to the value of the gold, because gold, again, like all commodities, like oil, is priced in US dollars. So when the US dollar gets devalued, gold and every other commodity in theory should appreciate in value. And that makes sense for gold. That's part of the equation, is my argument, is that it's not gold rising as much as it is the US dollar falling. But that's the interesting argument, because if you stick to that theory, then why doesn't that apply to oil? Because we saw, for example, when the US went off the gold standard, oil spiked because the oil producing countries said, wait a minute, if you're going to depreciate the value of the US dollar, which we sell our oil in, we're also going to adjust our price, the barrels that we sell in US dollars. That's why we saw that huge spike. It wasn't because oil all of a sudden became scarce. The crisis happened shortly after, but not when the US went off the gold standard. So it wasn't, again, the oil going up in value overnight. It was the dollar falling in value. And this is the portion that's not really being reported. And why is the dollar falling in value? I think it's a deliberate policy of Donald Trump's government and the U.S. government, regardless of who is president. They come to the realization that you have to devalue and even get the dollar close to debasement if you want to service your massive $37 trillion debt obligations. Because remember, the weaker the dollar it is, the cheaper it is for America to service its debt, because they borrowed those US dollars when the US dollar was much higher in value, but now when they lower and depreciated, they're paying back technically the same unit, but with much lower purchasing power. And as a debtor, inflation is good for you. But as a borrower, it's good for you. But as a lender, inflation is bad for you, because the person you lent money to is giving that money back to you slowly over time. But the underlying real purchasing power of that dollar is much less. So this is a deliberate policy of the US, and it's going to continue for a while. But there's also a third reason that I want to discuss. And the third reason is China. China is arguably the biggest buyer of gold right now. There might not be exact data points because China doesn't publish it very accurately, and they move numbers around and make it all fudgy. But this is my theory, and I'll argue why. Because Donald Trump and Xi Jinping have a big trade meeting coming up at the end of October, so next week. And as you'll see, this is China's MO. In the run-up to trade negotiations with America, they always double down on purchasing gold and selling US dollars as part of their negotiation strategy. Let's see. If we go back in time to the first trade war during Trump's first term, we see that China did exactly the same thing. China adds to gold reserves for the first time since October 2016. This was published in 2019 when the first trade war was reaching its peak. China steps up gold holdings amid trade war with US. Demand rises among consumers too. Again, 2018. What was happening then? The trade war. And this is exactly what China did too, back then and doing now. So China, in anticipation of putting a little bit of pressure on the US, saying if you're going to put pressure on us as a country, we're going to sell our US dollars in US denominated assets, which China holds trillions of dollars worth of it. So that's why they're putting pressure on the dollar as negotiating leverage. So one way to test this is to look at the meeting that's going to happen next week with Xi Jinping and Donald Trump and see if the gold actually falls in price. Because once they came to an agreement last time, we saw gold prices kind of go down until COVID, but they came down and stabilized. So if they stabilize again, we will know it's a signal that it's China really manipulating the gold market by buying up massive amounts in such a short period. But if it doesn't stabilize, that's a cause for concern and goes back to those structural concerns I said about inflation and a depreciating US dollar. So this is actually a watershed moment. Gold, even though itself is not a signal, does give us a symptom about the larger problem facing America. Is it short-term and related to trade in China, or is it more structural and long-term? And is the market pricing in the incoming debasement or the devaluation of the US dollar on a more permanent term? That answer will likely reveal itself in the first few weeks of November, even until the first few weeks of December. Because again, even if China and the US agree to mend their relationship with regards to trade like they did in the first term, when Xi and Trump had a big summit and gold prices stabilized afterwards, it takes a while for it to be priced in. China doesn't move overnight. It's a slow off and slow up because they don't trust each other. I'm guessing like last time, it's going to be a gradual selling of gold. So let's see what happens to the price of gold. We'll follow it closely. And again, here is more data points from China doing their same thing. China's buying gold. You see how much of a spike you had in the Shanghai gold warrant market when, like you just see, this is a deliberate reaction to Donald Trump. And if you don't believe me, read this headline. China's central bank extends gold buying spree to 10 months. September 7th, 2025. Go back 10 months. What happened? Who got elected? Who got sworn in as president? Exactly. That's China's reaction and response to Donald Trump. This is something that I haven't been seeing covered in a lot. They say, oh, gold is going up because people are worried about bubbles in the stock market. That's a really basic explanation. If you think about the price of gold as a basket and you put different factors in it, I've just shown you 3. Whereas the media or whoever you're listening to, usually from what I've seen, they only point to one factor. But the world is much more complicated than that. And this is what I'm trying to get at. But that's gold. Now let's go to oil and see why it's interesting that oil, as converse to gold, is actually falling in value and depreciating and falling in price. And to understand why oil is falling in value, you have to look who the big players are. Again, a big misconception is when we think about oil, we think about the Middle East. as the big oil barons. While it's true they have a lot of oil, because of the shale revolution post-2015, America, by leagues and bounds, is the world's biggest oil producer. So America could single-handedly set the price of oil. Long gone are the days of OPEC. Sure, OPEC could have some influence, but because they've been sanctioned to hell, the key players, and because America's eclipsed them in terms of oil output, OPEC has a diminished really say in what happens to the oil market. So it's the U.S. And why is the U.S., especially the U.S. government, encouraging oil companies to really drive down the price of oil? What could that be the reason? When I said at the beginning of the video, it's not natural, free, and fair market forces. It's actually deliberately pumping the market with oil to drive down the price. Why could that be? What's the reason? Let's think. And surprise, surprise, the reason is actually not economics, because it doesn't make sense from an economic sense, right? Because economics would dictate if the US dollar is depreciating in value, like gold, oil should also be appreciating in value. But that's not the case, because the answer and the underlying logic is geopolitical rather than economic. And America benefits from lower oil prices because they get to hit 3 geopolitical targets with one arrow. Who are America's 3 pain points geopolitically right now in the news? Russia, Canada, Venezuela, and if you want to add Iran. They're technically adversaries, which is ironic I say Canada, but if you've been following the news with canceling trade negotiations unilaterally over some stupid commercial or what have you, Donald Trump wants to put pressure on Canada. Donald Trump wants to put pressure on Russia. And Donald Trump wants to put pressure on Venezuela. Because for Russia, the share of oil, all the oil and gas sector in Russia's Q3 GDP very recently, 17.3%. And it's actually increased now because India is buying more oil from Russia. As Russia's other exports diminish because of sanctions, more countries are dependent on oil. They're working with Russia. Same with Canada. 21% of Canada's total merchandise exports last year were related to oil and natural gas. And Venezuela, wow, Venezuela, mineral oil, it dominated their exports. Again, a very sanctioned country, and it represents 79.6% of their entire export value. So by lowering oil prices, you're basically putting a lot of economic pressure geopolitically on these 3 countries, which in turn is negotiating leverage for Trump, because he's negotiating one way or another as we speak with these 3 countries to achieve different goals. Venezuela, interestingly, also has the largest oil reserves by far of any country. Let's look at Venezuela actually in a bit more detail because it's been in the news. If you've been following the news, Donald Trump is trying to use the guise of narco-terrorism to go after Venezuela. And he's been blowing up boats who we don't even have any evidence of who's on those boats. They might be criminals, they might be innocents, who knows. But there's been a recent huge military buildup of U.S. forces right outside of Venezuela. And it's a cause for concern because if you look at the history of, it came up the anniversary this week, invasion of Grenada. People think there's going to be a massive war with Venezuela, even if there is a military engagement. I don't think it's going to be boots on the ground style operation like we saw in Iraq or Afghanistan. Venezuela is a very weak country compared to the U.S., obviously. And if you saw Grenada, which was a similar circumstance, it was an 8-day conflict. They were back in the next week. And they achieved their goals. They toppled the current government, they put in a new person, and obviously if this is what Trump is aiming to do, he could easily do it. And I wouldn't be surprised if at the White House, people going over the military strategy with Trump before he signs it off, they're like, sir, we did this before in the 80s. The anniversary came up just recently. It was an 8-day in and out, quick and easy, like the other military operations you like. We're in, we're out. You're the no-war president, but if you want a little bit of a exercise or military muscle, it's a quick war. You'll look like a hero, and that's music to Trump's ears. So this is, again, one of the reasons why you want to drive the price of oil down, especially before an economic war or even a military war. It puts pressure on Venezuela because that's where their government proceeds come from. How are you going to pay your army if you don't have any money to do so when the price of oil is at historic lows, multi-year lows? It's very easy for the government, the military to defect at the first sound of American gunfire. Again, if this is where things are going, it makes sense, but we'll see.